Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar's bullish sentiment strengthened on Wednesday, surging over 1% against the US dollar, which tumbled from 105 figure to 104.10 following the softer than expected US inflation data, as investors reacted to the latest April CPI report, which showed a 3.4% rise in the consumer price index from a year earlier, slightly below the previous month's figure of 3.5%. Meanwhile, back in Australia, according to the official data from the Australian Bureau of Statistics, the ABS, Australians' unemployment rate rose to 4.1% in April, surpassing expectations and the previous figure. Employment change for April reached 38,500, exceeding forecasts significantly. Additionally, the participation rate increased to 66.7% from 66.6% in March. Full-time employment declined by 601,000, while part-time employment increased by 44,600. From the given data, the market is somewhat a little bit apprehensive as it breaks above that 67 cent and looking to its target of 67.45, which was nearly claimed this morning after reaching a high of 67.13. Although the technicals are somewhat positive, a little caution should be given as profit taking may emerge and therefore see a pullback to around 66.55 and the base now holding around 66 cents. A significant candle posted in the euro now exceeds its objective of 108.80. With the US dollar tumbling from 105 to 104, still gives room for a move to 103 and therefore puts 109 to 110 on the radar, which was last visited back in March this year or previously at the beginning of this year. Nevertheless, the trend is strong and therefore I feel any pullback will be short term and views the support level around 107.40.55. But as we progress further to the upside, profit taking is likely to be triggered above 109.25 onto 109.70.80 area, so still proceed with some caution and adjust your positions accordingly to your risk management. So with the softer CPI, the dollar yen has crumbled and taken out the support level, which was at 155.30.35, and now opens the pathway to pave its way lower on towards the region of 151.40.60. But we do need to see a break beneath 153 to get that extension to the downside, and any upside attempts likely to be limited from around 154.5 to 154.80.85. Sterling puts on a very firm performance on Wednesday, and as we can see now reaches the highs that were around late March, early April, and from the given pattern could exceed further on to 127.40. However, do be aware profit taking may emerge due to the overbought region from the RSI, and therefore looks for a pullback anywhere to 126.45 or 125.80. Spot gold surged towards the 2,400 mark on Wednesday following fresh US economic data that spurred further gains, and that is the CPI number has triggered further much talks of a potential rate cut earlier than September in the US. Although I don't have a strong view on the top side, the market still can see a pullback with no safety net seen until around 2,356 to 60. The reason why I'm a little bit cautious to the upside is the technicals are somewhat mixed, even though the ADX is supporting the trend to the bull case, but still profit taking can emerge given the fact that we are slightly overextended and therefore a pullback towards that 2,350 mark should not be ruled out. And given the posted hammer that we see from West Texas oil, the market is slightly in a recovery mode and looking on towards the region somewhere around 78, 80, 85 and a cap seen at $80.25.45. But the mixed technicals may overthrow this bullish candle and therefore see a rejection from that top side challenge eventually around that $80 mark and pull back towards its region seen at 76.40.55, which also could see a bullish ambush. Nevertheless, the market is likely to perform very whipsawed, so do be on your guard and adjust your positions accordingly to your risk management. Well, that's a wrap. Thank you for joining me, and as always, look out the interest rate report. I hope you enjoy the great start to the day.